Do you know your marginal tax rate and your effective tax rate? And do you understand what that information tells us about how effective your tax planning is? So your marginal tax rate is going to look at the percentage of tax that you paid on the last dollar that you earned. Okay, so in the US, we have these personal tax brackets. And those personal tax brackets tell us the first so many dollars of taxable income are taxed at 10%. The next so many dollars are taxed at this rate. It goes all the way up to 37%. So if you have earned and you have taxable income of $1 million, and that is the amount that you're being taxed on, the amount of income you're being taxed on, you're not going to pay $370,000 in tax because we have tax brackets. So the first so many dollars are going to get taxed at 10%, etc. So your marginal tax rate in that scenario would be 37%. But your total tax that you paid is not 37% of your taxable income. That is your effective tax rate. And a lot of things can impact that effective tax rate. We can have different deductions, different credits that we take advantage of. So we can actually have somebody in the 37% tax bracket having a 37% marginal rate, but their effective tax rate is much lower. And that is because there's different deductions and credits that we can take that don't factor into helping us determine your marginal tax rate. Okay, so an effective tax rate is really important because it's going to tell us how effective our tax plan is. So you have marginal tax rate and effective tax rate. Both of them are extremely important. You want to know what both of those are, okay? Marginal tax rate is going to be your tax bracket. Effective tax rate is the total percentage of your taxable income that you paid in tax. Okay? Hopefully that was helpful, and I'll see you guys next time.